Hi, everybody. January 6th, the market update desk with Scott Riley, NMLS number 157524. Well, we start a new week. This is the first full week of 25, and we get a big week in front of us for jobs data. Let's go through what's going to come out this week. And there's some very interesting dynamics happening within the Fed starting this week. Now, the Treasury this week is going to issue another $119 billion, that's with a B, of course, of new debt. Now, this is a significant amount of new Treasury supply. This is going to include $39 billion in 10-year bonds, and it looks like about $22 billion of 30-year bonds. Now, the amount of supply of Treasuries does have a significant impact on the market. So we're going to watch closely on not only how the market reacts to this amount of issuance, but also how the market is absorbing these within institutional investors, international, private and entities, and institutional investors. Now, what's really interesting is starting this week, we get a rotation in the Fed. What do I mean by that? The rotation is we're going to have a changing of 4 of the voting Fed regional presidents. 4 are going to go out, 4 are going to go in. And it's very important whether they lead hawkish or dovish. Hawkish, of course, are individuals that lean more on tighter fiscal policy, higher terminal rate. Dovish are more buoyed towards easing interest rates and spurring the economy. So who are going to be leaving this rotation is Richmond Fed President Thomas Barkin. Now, he's a hawk. We've got Atlanta Fed President Raphael Bostic, who's also a hawk. San Francisco Fed President Mary Daly, who I'd say leans hawkish, but is sometimes neutral. And then we're also removing Cleveland Fed President Beth Hammack, who was the dissenter on the last vote. So very interesting there. Now, the 4 that are going to rotate in, Chicago Fed President Austin Goolsbee, who honestly is probably going to be the biggest dove on the entire committee. So that's a very powerful addition to the dove side within the Fed committee. And that's going to really help potentially move us to maybe a better terminal rate than what we've been talking. We get Boston Fed President Susan Collins, who's a hawk, and St. Louis President Alberto Muslim, who's a hawk, and Kansas City Fed President Jeff Schmidt. And he tends to lean on the hawkish side too. Now, over the weekend, we had Fed Governor Adriana Kugler and Fed President Mary Daly speak about where they think we are and acknowledged we have made a lot of progress and we've come down a long time, but it's no time to pop the champagne. They still want to be very conservative as far as decisions going forward, but they do also emphasize that an important aspect of decision making is the unemployment rate, and they really want to make sure it doesn't tick up and starts to slide down a little bit from their perspective. Fed Governor Cook spoke this morning, said that the price increases have cooled, but there's more to go for inflation. He also said that it's likely appropriate to move to a more neutral stance, but that the Fed can afford to proceed cautiously with inflation being sticky and the labor market being stronger than initially anticipated. Now, it's interesting that they're talking about being a little bit slower. It seems like they're not acknowledging the weakness that's been in the jobs market. Speaking of the jobs market, we get Jobs Week this week. Start off tomorrow with the JOLTS report, ISM manufacturing, and the first of the bond auctions, the 10-year. Wednesday, we get mortgage applications, ADP payroll, Fed minutes, and the 30-year bond auction. Thursday, jobless claims. And then the big one for the week, the BLS jobs report on Friday. The markets are anticipating 140,000 jobs in the ADP report. on Wednesday and 160 in the BLS jobs report. Now, the market is expecting unemployment rate to remain steady at 4.2%. If the job creation component comes in light, unemployment could unexpectedly rise, which would be good for the bond market. Now, we've been talking, this is the January report where they do true up for the year, and I do have some trepidation on this report because the last 3 years we've had the January report blow the market out of the water with so-called job creations, which, of course, 2 months later we found out those jobs never really existed and that they were just air. Also, we got the apartment list report, showed that rents declined 0.6% in December and are now down 0.6% year over year. So we're making up some ground in the rents, which could eventually flow through to the household expenses within the shelter cost within the PCE and CPI report. Today we started out, so far we're up about 3 basis points in the 10-year bond. We're back above that 4.6 level, so it's a little bit concerning. Mortgage-backed securities slid off a little bit, and we fell below 100.17. So we're watching those things really carefully. So it's going to be a very busy week this week. We'll keep you up to date. It's January. It's time to start looking at houses. Give us a call. We'll help you get pre-approved, help explain the market, go over options and opportunities for you. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon.